Now we look at some more movers here on Wall Street. Schwab Network Sam Vadas is taking a look at Novo, which is up more than 5% today on some news. Let's hear a little bit about this.
In what otherwise is a very quiet day here as we get up and running, we do have some notable movers. Like you say, Novo Nordisk on the way higher. And this comes off the back of a couple of headlines that we've been seeing. One of those coming out late on Friday, which is saying that the Wegovy weight loss drug got approval from the FDA now to treat liver disease. So this is for the treatment of MASH. That is the acronym. The long title is a bit of a mouthful, but this is the liver condition that affects about 5% of adults here in the US. So this will be for adults along with a physical active lifestyle, exercise and a lower calorie diet. This is significant because Novo Nordisk said that it would be immediately available in the US now. There's only one other drug that actually treats this type of liver disease or MASH that was cleared back in 2024. It is important because it now makes Wegovy the first GLP-1 class treatment to actually be authorized for this liver treatment, which means that Novo's drugs go beyond just weight loss, obesity and diabetes now. So the studies apparently have shown that the drug's efficacy does show signs of lowering the risk of heart attacks and stroke as well. So this can be very much seen, and we're no doubt seeing that reflected in the stock today as far as investors cheering this news a win for Novo because of the fact that it has really been facing a lot of negative headlines recently. Obviously, there has been a lot of concerns around the competition, not just from the traditional pharmaceutical, other drug makers, but also the copycats, a lot of the knockoffs as well. So no doubt this is going to be able to offset that to, how the market feels about, some of the areas that it needs to address when it comes to some of the compounding worries. But it's also been facing the fact that there are reduced expectations of the weight loss drugs because of lower penetration in international markets as well. So that's something that they've been facing too. And so the other piece of news it's worth highlighting now, Nicole, is the fact that we're also seeing that they're offering the diabetes drug Ozempic for less than half the price of cash-paying US patients. So this seems to be another sort of move here as part of efforts to make this stuff more available to more people to ensure that, these customers are actually getting their hands on their stuff rather than sort of the imitation stuff that's out there in the market right now.
Yeah, and by the way, this deal that you just mentioned, that you'll be able to get at $4.99, Ozempic and Wegovy pens if you're a self-paying patient with GoodRx. GoodRx, folks, GDRX, is up 25% now on this news this morning. So it really is, obviously, a lot of folks want to get this, but they don't have the coverage. So that's a big deal to have that available. I mean, GLP-1s have been so popular and they're not going anywhere too fast. There's still demand.
That's right. And I think that really speaks to, why we'd gotten so comfortable with just seeing the trajectory of growth with companies like Novo Nordisk, also the folks over at Eli Lilly too, and that's why the significant pullback that we've seen for companies like this, have been raising a lot of eyebrows. I mean, caught a lot of attention. I mean, I was speaking to a couple of analysts in recent weeks off the back of both of these earnings from Novo and Eli Lilly as well, who seem to think that this market is just priced to perfection. So any negative headline that comes out, you do see the stock getting punished, but no doubt things are also being helped out at Novo Nordisk by the fact that we had that disappointing drug trial, or some of the data that came out of Eli's weight loss drug, where patients weren't actually losing as much weight as some had expected. And so when you look at these two sort of drug giants and their positioning here, there had been some expectation that Eli may have leapfrogged Novo, but some of those expectations have very much been reduced now.
We're looking at Workday today, and I see a couple of overweight ratings, but I also saw some apprehension, whether or not there's a major catalyst to move this higher. So the analysts seem somewhat mixed. Why are you looking at Workday here?
This is Dayforce. This is the company in the business of human resources management. So similar kind of a business, but we obviously are seeing Thoma Bravo, the private equity firm, now potentially looking at Dayforce as a buyout target. So This is according to a Bloomberg report that suggests that Thoma Bravo is in talks now to perhaps look at acquiring the human resources management software provider that is Dayforce Inc., looking to apparently take the company private in a deal that could be announced as soon as the coming weeks. And they do say that while discussions are ongoing right now, they still could be delayed because there could be another bidder in the market that may emerge. So let's just watch this space, certainly as far as confirming these reports that we're seeing. But the folks over at Bloomberg also quoting one analyst suggesting that we would not be surprised if Dayforce does choose to sell, given the lack of appreciation for the stock in public markets right now. I'll get to that in just a second, but they're also suggesting that this has been tough sledding for companies like this, particularly Dayforce, in the last few years, post-COVID highs, not unlike the rest of the HR payroll coverage universe. Now, it has very much underperformed the entire group. That's very much what the analyst has been suggesting here. We are seeing, obviously, a jump today, quite significantly, up 26% off the back of this news. This is in the business of providing sort of AI-powered software for things like managing recruitment, payrolls, employee career development, etc. But we have seen shares fallen about 60% prior to today. Obviously, we're seeing a nice jump. And that is because of the fact that they have had difficulties in maintaining the momentum post-COVID-19. The company still has seen increased revenue of more than 70% between 2021 and 2024. So they have become more profitable, but things have been sort of coming off just because of the fact that we'd seen the economy sort of reopen and, you know, obviously some of the economic uncertainties right now for businesses as well, Nicole.
Yeah, and Dayforce, number one in the S&P 500 today, as you noted, with this big move here today, up 26.5%. Workday will be reporting its quarterly report on August 21st, so I have that in my list of names in the news, so you can watch for that as well. Last but not least, Nvidia, which had a recent high of 184 and change. Some news this morning. Yes,
earnings next week, what some do call the Super Bowl of earnings. So we have got a couple of analyst calls out today, one of those being from Morgan Stanley, now raising the firm's price target to 206 from 200, right now at 182 and change, keeping an overweight rating on the shares. Expectations over there have risen ahead of these earnings, and the analyst says rightfully so. And that is because the firm has been pretty bullish on this name. It adds it to the optimism that centers on what lies ahead. So this is perhaps not a now story, but certainly something that we look at in 2026. Says that supply is what matters on the night of the earnings call, but demand is what sets it on that path for the future. The firm is now modelling $46.6 billion in revenue for the July quarter, so that's what they're setting their expectations at. That is higher than what they were previously forecasting as well. They do note strong demand from Nvidia's customers, adding that the strength has persisted beyond the company's largest handful of spenders. And you've also seen Cantor Fitzgerald also upping the price target now to 240. So that is very much on the higher end here from 200. So a significant jump, you could say. Keeping an overweight too, rating on the shares there. They've been talking about the Blackwell ramp up underway, seemingly insatiable demand for AI compute, and very much bullish on the confidence in a path to $200 billion, $300 billion in data center revenue for 25-26. And so they are fairly optimistic and encouraged here by the future growth potential from a company like this. But, you know, it's interesting. There's a headline out today that China is requiring data centers over there to, you know, use 50% of local chips, which is fascinating because that's really been the headline that's been driving a lot of the attention in Nvidia recently, with that H20 being able to get back to this market. But as we know, China's still playing very much catch-ups in that space too.
All right. Sam Vadas, thank you. A look at some key names to watch, folks.